The Brazilian central bank this week kept the country's benchmark interest rates unchanged at 13.75%. My name is Gustavo Ribeiro, editor in chief of the Brazilian Report, and this week we're going to debate what does that decision mean for the country and what we can expect in terms of the credit market and monetary policy for Brazil. I'm glad to be joined this week by finance reporter Fabiane Ziolla Menezes, right from Curitiba. Hello, Fabi. How are you?
I'm fine.
So, Fabi, not a reason for surprise, right? That the central bank went that way and did not change the level of Brazil's benchmark interest rates. But the central bank did throw sort of a curveball there, right?
Yes, it did. I mean, many analysts were expecting some kind of signal, some kind of message that the central bank could change his mind, maybe in the next meetings. But this message didn't came. And we know that the macro conditions as a whole, they are very, very difficult. I mean, inflation remains high and widespread. We see consumer price expectations deteriorating, and there is a high level of uncertainty when we look at the country's fiscal outlook. But what the analysts were expecting is that the central bank would give a different kind of message, something that would link the future decisions directly to the expectations on the fiscal rule that the finance minister, Fernando Haddad, is going to present.
Yes, I mean, and not only did the central bank not let the door open to cut rates in May when the Monetary Policy Committee will convene again, but it actually said that it could bring back that bitter pill of raising the interest rates, right? Which, I mean, again, 13.75% Brazil, for those who don't know, has the highest real interest rates in the world. So, I mean, pretty hawkish, right?
Yes, it is. The real interest rates are around, I mean, just over 7%, I think, in January. So it is the highest here real interest rates among many countries. And we have seen the kind of bad effect that this is having and in several sectors, especially retail. So any sector that relies on short-term financing to keep things rolling, to keep operating, they already see their debts much more expensive. And we see this kind of reflection in some of the results of the largest retailers here in Brazil. So we have the case of Americanas, who has for bankruptcy protection. We saw other retailers also in difficult situation because of this. So, I mean, there are some signs that are a true reason for concern when we think about how this high level of interest rates can really stop the country from growing.
No, and exactly. And I mean, like you said, sectors that depend on credit for their output have struggled. One example being the auto industry, which has seen a dip in demand and several car makers in Brazil have shut down production lines, put their factory workers on vacation, collective vacations. And another nasty consequence of high interest that I think we could cite is the fact that when Brazil had lower interest rates and the expectation that interest rates in the medium term would be much lower than they are today. Many companies in Brazil opted to get post-fixed interest rate loans, which were tied to the what we call in Brazil the CDI, which is the local interbank deposit certificate rate. And I mean, with the benchmark rate, the Selic, remaining high for longer than previously expected, the interest on these debts will also be higher than originally planned, which I mean, it's never a good sign, especially for companies that are already in debt. I mean, in this kind of scenario, when expectations grow worse about the rate, having a post-fixed loan is can be a death certificate for a lot of businesses, right?
Right. And when we see President Lula attacking the central banker chairman, Roberto Campos Neto, we know that this has a reflection within the productive sector. We know that business people in general are also asking for the interest rates to be cut. It's not just a political issue. It's not just a battle, a fight between Lula and the central bank. That there is real reasons for that. And we saw that today when we were seeing the repercussions of the decision yesterday. So some of the ministers of Lula, for example, Alexandre Padilha, the institutional relations minister, said that keeping the interest rates in this level is something disproportional. On the other hand, we saw the planning minister, Simone Tebet, adopting a more smoother tone, I think,
And
saying
Simone
that,
Tebet is more
yes,
conservative than the average Lula cabinet minister.
yeah, yeah, but still, both of them said that they expect a different kind of message next week when the central bank normally discloses its minutes about the decision. They expect something different, something more like recognizing the effort of the government to keep the public spending under control. But I don't know. I don't think that this is going to happen. It
Yeah,
would be
no,
something
and to
like the
your
central
point,
bank given, I don't know, uh, giving in to some
to the
of the pressure.
pressure. Yeah.
Yeah.
But I mean, to your point, in February, when we had the last monetary policy committee meeting, um, the central bank did just that. It gave us a very what many saw as an extending an olive branch to the government, because, like you said, for months Lula has pounded on the central bank, almost saying that it is to blame for the deceleration of the Brazilian economy. And then the central bank, in its minutes, said that they recognize that Fernando Haddad's plan to keep spending in check is a step in the right direction. But as a counterpoint, that time the statements from the policy decision were not this harsh as we saw this week. And I mean, it's almost like the government and the central bank are playing a game of chicken, where the government tries to bully the central bank into lowering the interest rates, and then the central bank sees itself as needing to reassert its independence and its autonomy, remembering that this board of directors was named during the Jair Bolsonaro administration, right?
Right. And I think the market is reading the message just like this. And I also think that postponing the presentation of the new fiscal rule, the proposal to tame public debt, doesn't help. Lula has asked, I think, for 4 or 5 changes in the proposal, and the text is now set to be made public in April after Lula returns from his trip to China, which gives more time, more room for speculations and heated emotions. I think so. This week more of speculations and I don't know. It doesn't help either. And many analysts think that this also can I don't know, make difficult for the market to accept the new fiscal rule when it is presented. I mean, they already expect that they would knew the proposal by now. So this is not good too.
Yes, no, definitely. And Fabi, I just want to briefly tell our viewers to subscribe to the Brazilian Report, which is the journalistic engine of the Brazilian Report. We can only do this kind of work and the reporting we do every day on our website, thanks to our loyal subscribers. Also, you can donate to the Brazilian Report by buying a cup of coffee to one of our journalists. And I mean, God knows journalists are fueled by coffee, and you can go to buymeacoffee.com/Brazilian Report, and if you subscribe to one of the membership tiers there, you can get exclusive perks such as behind the scenes newsletters. You can see how we do our journalism. We explain, for especially the scoops that we publish, how we got the information, how we verify the information. So I think a lot of mistrust in journalism is because people don't know how it is done, and we explain to you step by step how we do our work. You can also get exclusive content on Brazilian culture. So there are a lot of different perks there. Go to buymeacoffee.com/Brazilian Report to find out more, or you can just flash our QR codes that will be in the bottom corner of your screen. So go there, and once again, Brazilian.report/subscribe. Now, Fabi, before I let you go, we have to talk a little bit about what is about to come. And I'm not trying to ask you to see into the future, but we have, ways to guess what is about to come. First, like you said, we have to wait for the minutes that the central bank are going to present next week. But I'd like to call attention to something that when I saw this today, it almost sounded as taunting to me, because the central bank that just said we are still concerned about the trajectory of the fiscal outlook in Brazil. We still see a lot of uncertainty around the debt. And then we see one of Lula's cabinet ministers gladly telling everyone, well, we are going to give a 9% raise to federal workers, federal civil servants, and we're going to almost give like a 40-something readjustment to their meal checks, to their to the aid for them to buy lunch during work hours. And I mean, federal workers in Brazil, they earn on average twice what a private worker does. They have enormous perks like an ironclad stability. A lot of people think that should be a trade-off. You trade higher earnings for stability, but federal workers in Brazil always seem to manage to eat the cake and get the cake at the same time. How do you see? Did that also sound strange to you? Like especially the timing of that announcement?
Yes, totally bad timing. And it is yet another wrong nod to the central bank and the market, which are seeking more fiscal austerity, right? They are looking for signs of it, and they aren't receiving it. So, yes. And I think also that we don't know yet. We're not talking about the central bank and the market as a general, business people and analysts, but there is also another important party in this issue, which is the Congress, the legislative. So today, for example, we saw Minister Alexandre Padilha saying that the government has sufficient base to approve the new fiscal rule. We know that Fernando Haddad already presented the proposal for both heads of the Senate and the House.
And if I may
But
just interject a little bit, it's not just a simple majority, right? It's a constitutional majority, meaning that the proposal must go through 2 votes in the House, 2 votes in the Senate, and get a 60% majority in each time. So tall order.
yes, exactly, and uh, and uh, uh, and with no changes, right? Because government don't want any change, and the proposal. So it's not something easy to get, but so far we don't know the proposal yet, and we don't have the repercussion yet, the wide repercussion within the market and the society as a general. We don't know which is the size of this allied bloc that Padilla said today. So we don't know if the proposal will pass the Congress, which is another thing that we must be uh, concerned about in the next weeks.
Yeah, no, and I mean, we did our podcast this week on the new fiscal anchor, and we talked with Mário Sérgio Lima. He's an analyst and a columnist for the Brazilian Report, and but we were discussing that we have an additional risk this time around because usually governments send a proposal that is harsher than what they actually want because usually this sort of unpopular proposal gets diluted in Congress because lawmakers don't want to get on the bad side of voters. But now we have like senior members of the administration trying to play more loose with the fiscal outlook and trying to say that we should actually be expanding public spending, not reducing it, that this is the time to inject counter-cyclical measures into the economy to jolt activity. So then we have this weird situation where we could see the government not trying to put its name to an austerity proposal and then just essentially not having the bad side of governing, which is to pass unpopular measures sometimes, and then put all that burden on Congress, which could backfire, either not passing or conservative sectors, which are pretty sizable in Congress, saying, okay, we're going to call your bluff and make it extra harsh and unattainable, and essentially tie your hands until the rest of Lula's term. So very risky moves, and I don't know what you're getting when you talk to analysts, but it seems it's been already almost 3 months since the government has started, and it has lost a lot of precious time in trying to get this ball rolling. Right? I mean, the biggest opposition to the Workers' Party at this point seems to be sectors within the Workers' Party itself.
Yes, and we also see there is a kind of, how can I say, a kind of the environment now, the political environment for this kind of discussion is not, it's not so good either, because we are seeing dispute between the House Speaker Arthur Lira and the government for power. For we are seeing this dispute when we see the provisional measures that have to pass Congress, and we had a change in the rules during the pandemic when we saw the mixed committees with the Senate and the House deciding about these provisional measures together. Then during the pandemic, this rule was changed, and Arthur Lira doesn't want to go back to the old rule. And so the environment, the timing for the dispute now is also something that could, I don't know, harm the discussion around the new fiscal rule.
Yes, and we are going to be monitoring that for sure. Fabi, thank you very much.
Thank you.
So once again, thank you all for staying with us. And once again, I ask you to go to Brazilian.report/subscribe. Our business model is based on subscription. So by getting one of the membership tiers, you will be contributing to independent journalism from Brazil, about Brazil to the world. Fabi, thank you very much. And thank you all. We'll be back next week with more topical issues about Brazil and Latin America. Bye bye.